What's up, guys? Welcome back to another trading video with me, Oscar, also known as Colson in Profitly Chat. Today we're going to talk about a real capital trade that I took. It turned out to be a profit, which is I'm super stoked about that. Um, the key things that I did good in this trade was mainly the lessons that I talked about in the previous video. Although I didn't actively think about this so much, but it turned out to be exactly the things that I did wrong the last time that I improved on and did right this time. And I think it's some key factors around that. First off, because I got not burned but I learned last time on NMDM to not be on the wrong side of the momentum. Secondly, after that trade, I did some tracking to see whether the stock is usually just gap and crap, or if it's gap and push, gap and fake out, stuff like that. So those are the key things that I did differently and that prepared me for this trade. So I'm going to give you a brief explanation of I'm going to give you the main thinking process behind CLPS. So if you look at stocks to trade, we can see, unfortunately we cannot zoom in on this so that I only get this, so I haven't taken a screenshot. So as we got into today's trading, this stock was gapping up. We were gapping up around, at the peak we were about 80 to 90%, but we ended up gapping up like 60 to 70 something around that percentage wise. So the chart looked like this, and there are some key factors that made me want to short this. First off, it was gapping up on no news. That's always it's not sketchy, but it's always something that you should be aware of. I don't like being long on stocks that gap ups for no reason. That's just playing the lotto. Secondly, this is an IPO, and I know many people think that IPOs are sketchy, and I totally agree with you. But something that I found or figured out was that, and I'll show you this chart actually, that the IPO deal, so there's a deal, most of the time is a discount price, like if some of them want to buy prior to the IPO announcing. So I think they did that, if I read the filings correct. And that discount price was 5.25, and it was 2 million shares, or 2,300,000, something like that. And so I said, okay, hey, cool, I know that now. Let's see what we have. So on this day we traded like 1 million, and if you look into the intraday of this day, there couldn't been more than 500k selling. So, and also if you just look at this chart, it's a depressed chart. You see there's a constant selling pressure. So this indicated to me that people want to sell their shares. Of course they want to sell up here for a quick profit. They bought a discount price and then they want to sell it, of course. And then we got below that 525 level, or just at it. And of course the general psychological process is you don't want to sell for break even or a loss. You want to make profits. Then you might think, okay, but this day is highly above 520 and it has some volume. In fact, this only has 1.3 million in volume, and also the fact that this day didn't have much of selling pressure. I can show you this. So what were we? 520. So as you can see, there's not like major volume on the selling, only until the market close. And this major, quote unquote, major volume is like totally around 200 to 300k. So this sums up that there should be around 1.5 or 1.3 million shares left to be sold, or yeah, to be sold. So that was my main thinking process going into today. I was first off thinking about those shares that still were left out there. Of course, people want to take a profit, and when we're getting up to the tens, that's 100% gain. And I think that's a mental level for people when they want to take profits. That's like stupidly good. You double your money on an investment. Like the average Joe should be starting to think stuff like, okay, I probably should take this money and run. And like, hey, I made 100% of my money on this investment. The number two factor was that I thought of every short as of me that wanted to short an overextended gap up and wanting to see that gap and crap. And that made me think of, or that made me realize actually, that there are two sources of selling pressure. Duxus also always talks about having two sources of buying pressure as you want to buy dips. I just flip that analogy around and seeing, okay, do I have two sources of selling pressure for this potential short? And the answer is yes. There are the majority people that want to short this because it's a quote-unquote overextended gap up. And the other selling pressures, or the other source for the selling pressure, comes from those that want to take their profits on their original investment. So this made me want to short this, and I'll give you my exact entries and exits of my Profitly. I made a lousy $20, but you know, you gotta. I'm going to continue doing this small trades until I feel really comfortable. This trade made me feel very much more comfortable with this setup. I'm gonna try not to size this up too fast because I think that could be really dangerous. But as you can see, I took 20 shares, and I entered at 160 and I exited at 959. And actually this was only a starter. I only wanted to have this as starter. Give you the 1 minute and I mark it out real quick. So I took I took my position in here, which was supposed to be a starter, and I exited down here, I think. Yeah, down here. So it was like a really quick trade, you can say. It's 30 minutes, but you know, I left a lot on the table. But you know, you trade, you learn, and these reviews totally helps me to review and remind me until next time that, okay, maybe I should be more patient with this. But why I didn't want to size up fully into this dip was, if we even look at the 5-minute chart, I think it's even clearer, because we got this 560, where are you? Or even the 2 minutes. It was into this, so the 5-minute chart looked really bearish actually. 55, so it should be, yeah, it's this. Okay, so good lesson right away. Also that I didn't notice until now. On the 5-minute chart, this is totally bearish. I don't see any whatsoever reason that I shouldn't take this. Like one tiny bit, somewhat, that it hasn't cracked lower, but this increase in drop length is totally a bearish sign. But what my main process, or my main thinking was that this bottom out just below this like small dip that we have had in the early morning or the early morning trading. But I don't know, that shouldn't have made me uneasy. And also the fact, and I think this is the main factor actually, because we also have seen these stock drop to around this level, setting higher lows, and then just simply ripping. So that was something that I was a bit uncomfortable with, and therefore I only took a starter of 20 shares. My original size would have been 40 shares. So still not big money, but I didn't wanna trade full size right away because I wasn't comfortable with that. But really good lesson to look into the 5 minute chart actually. And I don't get me wrong, I use multiple time frames all the time, but I gotta have missed the 5 minute time frame. So that's the trade. And as you see, I covered it way too early. I left like, I don't know, 15% on the table. But hey, I captured the meat of the move, so I'm super happy that I got my thesis right. Also, as we have this stock running, I want to talk about second potential trade that I could have taken, coulda, woulda, shoulda, but that I didn't take, and how thinking about like that stuff, how you manage and tackle those stuff. So first off, I'm going to say that before I took this trade, as I said, I've been watching like 12 stocks, gapping up and then fading, or gapping up and crapping. So it's not like I just saw this and I traded it. I was prepared. The second trade that you could have taken today and that offered good risk reward was this bounce up to previous resistance in the 960s, or the high 960s, or even the 980s, 970s. I hesitated to take this trade, mainly I think because I was green on the day, and I didn't want to like mess up my profits. I want to end the day on green, so therefore I didn't take the trade. Secondly, as I talked about just like 2 seconds ago, I haven't, just as with gap and craps, I have been tracking and watching a lot of them. I haven't tracked and I haven't watched so many setups of this stuff bounce into previous resistance. I've only seen like the 2 examples that's given in trading tickers, and that's not enough for me. I want to see the real action, I want to feel it, stuff like that. So the main things that I'm going to take with me from this trade is keep on trying to be on the right side of the momentum, as I talked about in previous video as well. Secondly, it's okay to be impatient, but try to give the short time. And I really just covered because this was like holding up, and I thought this was going to bounce off. As you can see, it didn't do that. And what's the worst that's going to happen? I'm losing half or all of it. So I stayed patient. For sure, I should like take profits off to pay myself, but I don't know. Just a quick reminder to be more patient, and probably just track more to see what you should expect from them. And the second main lesson is if you're not comfortable with a trade or comfortable with a trading setup, just keep on watching them until you're too sick of you not taking the trade, because that's exactly what I would have been with CLPS if I hadn't taken the trade. I would been saying like, seriously, you missed another one? Why didn't you take it? It was clear as day. So that's the two key lessons. keep on watching until you're confident with a trading setup. And 2, let the chart tell you when to cover. This little stuff or little hold up it didn't make higher lows, it didn't make anything. So yeah, I'm going to work on that, and as always guys, have a nice one and have a nice weekend. Peace.